Every country on Earth is in debt. The United States alone owes over $38 trillion, which is more than it has ever owed in history. The European Union is carrying around $14 trillion, and Japan is close to $9 trillion. Even wealthy nations like Saudi Arabia or major exporters like Germany and China are sitting on huge piles of debt. Now here's the funny part. If everyone owes money, who actually gets paid? This is the world of financial history, where money, power, and human decisions all meet. And trust me, nothing here is as simple as it seems. Debt isn't just a heavy load, it's the invisible frame that holds up our modern world. Every war, every crisis, every boom and bust rests on it, and if you follow the trail of lenders long enough, you find something surprising. The world doesn't really owe money to any one person or country. It owes it to itself. But just because the world owes itself doesn't mean everyone benefits the same way. To understand how we got here, a planet swimming in over $315 trillion in total debt, nearly 3 times the size of the global economy. We need to go way back. Centuries before credit cards or digital transfers existed, the idea of national debt was born on battlefields, not Wall Street. In 1694, England was at war with France and running low on gold. The king turned to merchants for help. In return for a guaranteed stream of interest backed by future taxes, these merchants funded the crown. To manage all of this, the Bank of England was created. It was revolutionary. The government could spend money it didn't have yet, and the lenders got something very valuable, a promise from the government that could be traded, bought, or sold. That promise was the first government bond, the seed of today's financial system. Other countries quickly followed. France copied the idea. The Netherlands improved it. And the newly independent United States used government bonds to pay for its revolution and later to expand westward. National debt became a badge of credibility rather than failure. If you could borrow, you had power. Empires used to conquer land to take gold. Now they issued bonds to collect interest. The battlefield became the balance sheet. Fast forward 3 centuries, and debt is now a global product. The US owes $38 trillion. Japan, over $9 trillion. Worldwide borrowing grows by about $1 trillion. Every 100 days, every country owes, every bank lends, and every citizen, through taxes, savings, or pensions, is both a debtor and a creditor. But who is holding the other end of the rope? Let's look at the US first, because its debt isn't just local, it's global. Half of the $38 trillion is publicly held, meaning owed to investors, not just other parts of the government. Around 2/3 of these investors are Americans: banks, pension funds, mutual funds, insurance companies, and the Federal Reserve. The other third, about $9 trillion, is in foreign hands. Japan tops the list with around $1 trillion, followed by China with about $800 billion. Then the UK, Luxembourg, and Belgium. So when people say the US owes China a lot, that's true. But it's only about 2% of the total. Most of America's debt is owed to Americans themselves. Treasury bonds are issued, banks and funds buy them, and the Federal Reserve often buys them back, creating new dollars. Taxes pay the interest on these bonds, which then flow into retirement accounts. It's like a circular mirror. The debt is real, but the creditor is mostly a reflection of the same system. And this circle isn't just American, it's everywhere. Japan lends to the US through treasuries. The US lends to Europe via the IMF. Europe lends to developing countries through the World Bank. Developing countries, in turn, park reserves in Western bonds. It's like a giant game of hot potato, except the potato is made of promises. Every country holds another country's IOU. Every promise is backed by another promise. Imagine a poker table where each player has borrowed chips from the next. The only rule keeping it going is that no one leaves the table. Then there's a fourth layer, the markets themselves. Behind every government bond is a web of institutions, hedge funds, pension funds, sovereign wealth funds, and central banks managing tens of trillions. These are the real bosses of credit. They decide who can borrow cheaply and who has to pay a high price. When confidence drops, currencies crash, governments stumble, and economies can be turned upside down overnight. Democracy chooses who governs, but the markets decide who survives. At the top sits the central bank, the high priest of this system. Central banks don't just manage debt, they make it. Every time the Federal Reserve or the European Central Bank buys bonds, they create new money. A liability on one sheet becomes an asset on another. Every dollar in circulation represents debt somewhere else. There's no such thing as debt-free money. Every coin, note, or digital dollar carries an invisible IOU. For decades, this loop has worked because people trust it. As long as investors believe governments will pay interest, even if the principal isn't fully repaid, the machine keeps turning. But confidence can falter. Greece, in 2010, is a good example. Its debt became impossible to pay. Bondholders panicked, yields skyrocketed, and the European Central Bank and IMF stepped in. But their help came with conditions: tax increases, spending cuts, and mass unemployment. For a whole generation, bailout meant sacrifice. In Argentina, repeated defaults turned debt into a curse. In Sri Lanka, running out of foreign currency led to fuel shortages and political collapse. When the system fails, creditors suddenly become visible. IMF, rating agencies, anonymous bondholders holding entire nations by the throat. And yet, even after collapse, the logic restarts. New loans replace old ones, debts are restructured, and the machine resets. In the 21st century, debt isn't meant to be repaid fully, it's meant to be rolled over. Governments don't plan to pay off their debt, not now, not ever. This isn't a conspiracy, it's policy. Unlike us, governments treat debt like a rolling subscription. New bonds pay for old ones, and interest becomes the real product, the rent for stability. The global economy depends on it. Like a shark must keep moving to survive. The US will never clear its $38 trillion debt. Japan has been rolling over its debt for decades, now over 250% of GDP, yet yields are near zero. Investors aren't waiting to be repaid, they're waiting to renew the deal. Why? Because government debt is the safest collateral. A US Treasury bond isn't a liability, it's an asset, the backbone of global markets. Pension funds hold it, banks use it as security, central banks treat it as money. The system depends on governments never fully repaying their debt. If they did, the world would lose its most trusted asset. The money supply would shrink, triggering deflation and collapse. So instead, governments issue debt steadily, like a heartbeat for capitalism, pulsing through pensions, mortgages, and markets everywhere. Promises to pay down the national debt are mostly illusions. The goal isn't to eliminate debt, it's to keep it manageable and trusted. Once trust fades, numbers don't matter. Confidence crashes, interest rates spike, and the economy, built on promises, stops. That's the secret of sovereign debt. It's not meant to be fully repaid, only to keep belief alive. Trust isn't shared equally. Saying we owe it to ourselves is only partly true. Interest payments flow upward, from taxpayers to investors. Debt is a transfer between countries, yes, but also between social classes. Global debt and inequality rise together. Those who own debt are rewarded. Those who pay it are not. Creditors aren't villains. Debtors aren't victims. They're both part of the same engine. Problems arise when the engine runs out of fuel, when new borrowing can't match old promises. At the top of the global pyramid, there's no single culprit. It's not China, not Wall Street, not the IMF. It's all of them, and all of us. Debt has become money itself. Governments issue it, banks multiply it, investors trade it, and citizens rely on it. The line between debtor and creditor is blurry. Debt once meant bondage. Today it means balance. But if confidence breaks, the illusion ends, and we see what debt really is: a promise that can't last forever. If this gave you a new perspective, hit subscribe. History has all the answers. You just need to know where to look. Thanks for watching. If this video gave you a new perspective, make sure to hit the like button and subscribe for more content like this. Share your thoughts in the comments. I read everyone. See you in the next video.